You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 8th day of August, 2024. Thanks so much for joining us. Wherever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do 2 every trading day. The first one is our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, when Michael comes on a little bit later in the broadcast, he will walk you through step by step how to take the trial. There's no credit card required. And when you take the trial, we're going to treat you just like you were a passport holder for 5 consecutive trading days. So you don't have to worry about what day of the week or weekend you sign up for the trial. You'll get 5 consecutive trading days, even if it stretches over a weekend. So if you were to register today, we'll get your desktop set up, get your indicators indicating. Your trial will begin tomorrow officially, and then you'll get 4 days next week. The weekend's just a freebie, okay? Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's a couple different ways to join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says noon broadcast, click the link, fill out the 30-second registration form, and you're done. What will happen is, going forward every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, and you still want to join live. And there'll be days when you're busy and can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, youtube.com/CFRN. I assume you have the YouTube part already memorized, so all you have to remember is CFRN. Now, not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. This is our daily schedule. About 12:50 is when Michael will pop in and give us a recap of what happened in the live training room this morning. And we'll do some live trading for a half hour on the TradingView platform from 1 to 1:30. And then I'll come back and wrap things up with our good word for the day. For now, let's jump into our daily devotional. We started a new topic yesterday, crash the chatterbox. The chatterbox is that dialogue that's constantly, from the moment you wake up to you fall asleep, talking to you. Are you listening to that voice? Our scripture today is Matthew 3, verses 16 through 17. The moment Jesus came up out of the baptismal waters, the skies opened up, and he saw God's Spirit. It looked like a dove, descending and landing on him. And along with the Spirit, a voice. This is my Son, chosen and marked by my love, delight of my life. In the King James Version, you'll probably be familiar with this as my Son, with whom I am well pleased. It's Matthew 3, verses 16 through 17. And today we're going to talk about insecurity. God says, I am. Do you know that preachers tend to be one of the most insecure groups of people on the planet? Kind of ironic, don't you think? Especially if you realize that insecurity might be the ultimate insult to God. Think about it. If I believe the lies of my insecurities, it's as if I believe God didn't quite get it right when he put this calling on my life. Well, the chatterbox loves to point out those things I see in myself as imperfections and convince me that's who I am. And sometimes I can be tricked into believing it. What's interesting is that God also sees all my imperfections. As a matter of fact, he knows what they are better than I do. He knows everything that's wrong with me and why it's wrong. Yet when God talks about who I am, he says things such as, I am fearfully and wonderfully made in his image. I am sealed with his promise. I am redeemed. In Matthew 4, the devil had no chance against Jesus when he tempted him with lies in the desert. Because at the end of Matthew 3, when Jesus was baptized, he heard the simple affirmation of God's word. This is my Son, whom I love. With him I am well pleased. Jesus understood that before his ministry began. His Father loved him and was pleased with him. So when it came to defeating the devil, Jesus did not draw on his strength from his own opinion of himself or from the opinion of the people around him. He drew strength from his Father's words. God speaks the same word over us every day. We just have to hear it. If we push aside the lies of the chatterbox and focus on the words, God says I am. We don't have to live up to anyone else's expectations or even our own. Instead, we can begin to live out of the perfect affirmations already given us in God's Word. Join me in prayer. Heavenly Father, thank you for making me unique. You have a purpose for my life that far exceeds my own ability or expectation. Father, teach me to lean solely on what you say about me. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and have it Thursday. Speaking of Thursday, tonight is our members only workshop. Obviously, based on the title, you've got to be a member to get in. So if you've been on the trial, you should be getting an email today with instructions on how you can become a member. And if you take care of that, you'll get an invitation for the workshop tonight. And to members, please have your questions ready. Let me give you the numbers from around the world. We'll start in the U.S. with the cash markets, or the indices. Currently, the Dow's up 543 points, almost 1.5%. NASDAQ up 400 points, 2.5%. S&P 500 up 100 points, almost 2%. And the Russell 2000 up 37 points, almost 2%. In the commodity basket, crude oil up 53 cents, trading 75.85 last. It's a gain of almost 1%. Gold up $26.50. That's a gain of a little over 1%. Silver up 60 cents, trading 27.54 last. That's a gain of 2.25%. Keep in mind, when silver moves $1 in price, that's worth $5,000 per contract traded. So, up 58 cents, we're talking a little over $2,500 at the moment per contract traded. In the Asian markets at the close, the Nikkei dropped 258 points. The Shanghai remained unchanged on the session, and the Hang Seng rose 13. In the European markets at the close, FTSE down 21, the DAX up 65, the CAC down 18. So we had a mixed day in Asia. It was a mixed day for the UK, but it's a rock solid green Radio Thursday here in the US of A. Of course, that has to do with that econ report we got this morning. We'll talk a little bit about that. Let's take a look at some of the news out there. US stocks took a leap higher today after weekly initial jobless claims fell more than forecast in a reassuring update on the health of the U.S. labor market. The normally routine jobless claim update found itself in the spotlight today amid increasing scrutiny on the labor market, as last week's sluggish non-farm payrolls update served as one of the earliest catalysts of the recent decline. Government data showed that there were 233,000 initial jobless claims in the week ending August 3rd, down from 250,000 last week, and fewer than what economists had forecast. The number added a fresh jolt in Thursday's trading. Wall Street saw a comeback attempt falter yesterday as stocks faded into the close and ended up with some pretty sizable declines. The moves from big gains to significant losses continued a turbulent stretch that has pervaded markets for much of the past week. Nvidia. Oh, Nvidia. This is from Bloomberg. On the surface, Nvidia Corp's $900 billion sell-off. Let me say that again. Nvidia's $900 billion sell-off since its June record would suggest the artificial intelligence spending boom that propelled it there is cooling. But the undercurrents tell a far less dire story. In fact, Nvidia is up 4.5% right now. Microsoft, Amazon, Alphabet, and Meta, together accounting for more than 40% of Nvidia's revenue, have all said they will keep investing billions into AI infrastructure. Meanwhile, Supermicro Incorporated, which makes data center servers used in AI, told investors it expects to generate up to $30 billion in sales over the next year, blowing away analyst expectations. And yet Nvidia, the prime beneficiary of AI spending, has seen its shares tumble 25% in less than 2 months. Speaking of AI, Google is facing a bigger threat from Sam Altman's OpenAI, even as it awaits a decision on how antitrust regulators in Washington plan to level the playing field in the internet search business. A U.S. ruling Monday found that Google built an illegal search monopoly and is being considered a big win for regulators. But an increasing number of people using AI tools, including OpenAI's popular ChatGPT chatbot, is already eroding Google's dominance, according to varied sources from investors to analysts. A former Google engineer who worked on products, including search, for a decade at Google, said, "I think for Google right now, AI is a much bigger deal than the ruling. AI is fundamentally changing how the search product also works." Now, this engineer, Arvind Jain is his name, now runs an enterprise search firm called Glean, Glean. I'm not familiar with it. Said AI's impact was immediate compared with any impact from these rulings that get appealed and take a long time to actually affect the market. And of course, we know Google has a legion of attorneys watching their back. Google has long been synonymous with search. Do you remember when it became a verb instead of a noun? I mean, the best example probably is tissue paper, where you blow your nose. Whether it's the generic brand or not that you get at the grocery store, what do you call it? Kleenex, right? Doesn't matter what brand it is, it's Kleenex. And when you go search for something on the internet, what are you doing? You're Googling it. When somebody asks you a question you don't know the answer to, what do you tell them to do? Google it. Now, Google has long been synonymous with search, commanding around 90% of the global market share and bringing in about $175 billion in annual revenue. Even Apple, which prefers to build all the software and much of the hardware that goes into its devices, has allowed Google to be its default search engine for a very handsome fee. But the days of preferential treatment for a fee are over, even before a slew of antitrust court cases are resolved. In its AI foray, Apple announced a partnership with OpenAI to bring ChatGPT to its upcoming devices. It emphasized the deal's non-exclusive basis and talked up the likelihood of bringing on Google as another partner. Yeah, I know. An ongoing European Commission's investigation into social media platform X could take its handling of harmful content related to the recent UK riots into account. Last month, European Union officials issued charges against X, owned by tech billionaire Elon Musk, under the Digital Services Act, which requires very large online platforms to do more to tackle illegal content and risks to public security. While Britain has not been a member of the EU since 2020, harmful content in breach of DSA rules shared in Britain may have been seen by users in Europe, constituting a potential breach of the law. Disinformation and calls to violence spread on social media in Britain in recent days after far-right and anti-Muslim groups seized on the fatal stabbing of 3 young girls. Isn't it interesting the treatment some news gets over others? Well, everybody knows it's been a rough week for Bitcoin and the entire crypto market in general. Bitcoin faced a significant dip this week with prices at around 58,000. It dropped to 48,900, breaking through some key support levels. It has since stabilized and is now currently trading back around 58,000. Several factors contributed to this volatile price action. The DeFi sector saw a major impact as Jump Crypto, a crypto market maker, began moving substantial funds. Rumors suggested Jump Trading might be closing its market-making business, and reports indicated they were dumping ETH, or Ether. Additionally, Jump has moved millions in other crypto assets and stable coins to exchanges, raising even more concerns. The CFTC is actively investigating Jump, which has faced leadership changes and was actively involved with FTX and Terra Luna. After this news began circulating, just over $1.2 billion was liquidated in the crypto market in a 24-hour period, marking the largest daily drop in the crypto market since 2022. Bitcoin's price fell from 70,000 to 49,000 in 8 days. The sell-off also reflects fears of a U.S. recession and global geopolitical uncertainties. For example, Japan's recent interest rate hike to 0.25 percentage point. That's it. That is their interest rate, 0.25%. They've been at 0 and below for a long time. And of course, we've talked about the Nikkei having its biggest 2-day drop in history. Japan had its worst stock market losses since 1987. The interest rate hike also strengthened the yen against the dollar. The Bank of Japan has indicated no more rate hikes in the near term, which could be a good sign for the crypto and stock market. On the regulatory front, the U.S. Treasury launched a $50 billion buyback program on August 6th, aiming to purchase Treasury securities to support market liquidity. This program includes $8.5 billion in August, $31.5 billion in September, and $10 billion in October. Meanwhile, U.S. credit card debt hit a record $1.14 trillion, with rising delinquency rates, especially among younger consumers. If you've got a young person in your life, you need to sit them down, you need to talk to them. I'm blown away by how many credit card offers come to my namesake, Dwayne from Uganda, who lives with us now. He's in college, he has a job, doesn't make a lot of money. But though I warned him ahead of time, and my wife warned him ahead of time, they've already got, he's not even 19 yet. He's drowning in debt. Against good advice. So, you can talk to people, but once a young person turns 18, the world considers them legally an adult. So sometimes you have to just learn from your own mistakes, I guess. Bondholders in the riskiest corners of the corporate debt market face more pain as highly levered companies line up to refinance their debt in a still high interest rate environment. That's according to Northern Trust Asset Management. Now, in the previous article, the money I spoke about, when the U.S. Treasury launches a $50 billion buyback program, you do understand where they get that money from, right? The Federal Reserve, which is not a part of the U.S. government. It's a private corporation. So the Treasury borrows $50 billion. Well, you know where interest rates are right now. To buy their own treasuries, because nobody else wants to buy them, because nobody seems to have much faith in America anymore. Now, how does the Fed get paid back? Of course, that's your tax dollars. So while U.S. credit card debt did hit a record $1.14 trillion, the U.S.'s debt hit a milestone last week, $35 trillion. Eli Lilly got some wind beneath its wings today as they reported significantly better than expected earnings, with revenue coming in 13% higher than Wall Street estimates of $11.3 billion for the second quarter. That's a 36% jump in revenue from the prior year. Go big pharma. Lilly up almost 8% on the day. But things aren't quite so sunny over at Warner Brothers and Discovery, symbols WBD. Those shares are deep in the red after the media giant reported a nearly $10 billion loss that includes a $9.1 billion write-down on its TV networks. Investors are searching for safety after 4 of the previous 5 trading days ended in the red. Wall Street has been in a seesaw since last week's disappointing jobs data. On the earnings front this morning, we heard from Eli Lilly, Datadog, Novavax, and Krispy Kreme. I love their symbol, DNUT, as in donut. It's pretty good. Also, Robinhood, Occidental Petroleum, and Shopify. And in our last little bit of news, Moscow has suppressed independent Russian language media, but YouTube has remained a bastion of online freedom of expression, giving opposition figures a platform to air their views. Now, YouTube in Russia is living on borrowed time. Russian internet monitoring services reported mass outages today of the online video service, which is owned by Alphabet's Google, the latest slowdown in recent weeks. Russian lawmakers have blamed Google's failure to upgrade its equipment in Russia since the 2022 invasion of Ukraine for a slowdown that started in mid-July. Company and technology experts dispute this is the case. Russia's state communications regulator did not respond to any questions or offer any comments. With independent Russian language media banned, YouTube is a key source of opposition views. One video by late opposition leader Alexei Navalny, alleging that President Vladimir Putin is the ultimate owner of an opulent palace, something Putin denies. Well, it's been viewed more than 132 million times. Blocking YouTube, used by more than 50 million Russians every day, according to Mediascope, could have damaging implications for online freedom of speech, threaten Russia's general internet connectivity, and the livelihoods of thousands of content creators. We've seen that particular regions lose YouTube connectivity overall or slow down by 90% for days at a time, which is not really explainable by the servers being old. That's from a YouTuber with 93,000 subscribers. Russia wants Google to unlock or unblock Russian state media channels from YouTube, and has also fined the U.S. company many times for not removing content Moscow considers illegal, such as what it calls fakes about the war in Ukraine. Well, another surprise, I posted it in Breeze today. Putin signed off on allowing cryptocurrency mining or Bitcoin mining in Russia, something they've long resisted. So, let me see. Valerie sent me an update. I guess she did not. Okay. So we'll go with what we got. Logic 247. That's our 24/7 around the clock E-mini alert service. Not just E-minis, but also crude and gold and silver and euro and bonds. We're in week 314. And over those 314 weeks, we've issued over 17,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, based on market structure and a simple process we teach all of our passport holders in their one-on-one mentoring sessions. At the time of the recap this morning, 8:15, there was a total of 66 alerts issued Since the markets opened this past Sunday night at 6 p.m. Eastern, still waiting on the outcome of 17. It gave us 49 actionable alerts, of which 1 or 2% would have been stopped out. Again, based on market structure and that very simple process we teach all of our passport holders. Be sitting at 2% on a Thursday. It's a pretty good week. As I said, over the last 314 weeks, first we had the beta test. Once that was complete, then we officially launched. And we're in week 314, 17,000, over 17,500 individual alerts. Now, purpose of the Logic 247 alerts is not just so you can trade those and not have to worry about learning how to trade. They're designed to help you learn to read the chart so that you can learn how to trade. When you go to school as a kid, what's the first thing they teach you if you don't already know? How to read. Because you need to be able to read to learn all the other subjects besides reading, right? Well, in the financial markets, when you look at a chart, it seems a bit chaotic. But every chart tells a story. And as you learn to read the chart, you are able to find windows of opportunity. And while no one knows what's going to happen next in the markets, you can always know with a great degree of probability what the next high probability move is once you learn to read the chart. If you use the logic alerts as they're intended, pretty soon you won't need anybody else to tell you when to get in, when to get out, because you'll just read the chart, and the chart is the best source of information you can have. It tells you everything you need to know. Our indicators help a little bit. You gotta learn to read the chart. Every chart tells a story. Your job is to determine what that story is and then trade accordingly based on whatever's in front of you. Now, our other alert service, the concierge trade alerts, they're a little bit different. First, you want to nail the logic alerts, and then you're ready to see if you've really learned to read the chart. The CTAs are published as a static report shortly after the Globex open each evening. So last night, 10 minutes after the open. Now the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock, and we have traders around the globe. Our day session is their night session, and vice versa. But no matter where you're at on planet Earth, at 6 p.m. Eastern, New York time, the Globex markets open. Everybody knows we're in the Thursday session. Thursday session began last night at 6 p.m. Eastern. The Thursday session will end today, an hour after stocks close at 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, the markets will reopen, and that will be the beginning of the Friday session. Now, when the CTAs are published, the first thing you want to do is go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at the time the report is published. It'll always be between these two numbers. Price gets above the 30-minute BBC, it's attempting to reach the long target. Price is below the 30-minute BBC, it's attempting to reach the short target. BBC is simply the green line you see on all my charts. BBC stands for bull, bear, cross. When price crosses above the green line, we're bullish, anticipating higher prices. When price crosses below the green line, we're bearish, anticipating lower prices. Now, the markets are fractal in nature, so you can apply the BBC to any time frame: daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart. It doesn't matter. It functions the same on any chart. Price gets above the green line, look for higher prices. Price gets below the green line, look for lower prices, always relative to whatever time frame you're looking at. Now, the logic alerts and the concierge trade alerts are all built off of the 30-minute chart. Nothing magic about 30 minutes. It's just a time frame I chose many years ago, and if it's not broke, leave it alone. Now, with the logic alerts, you get an entry price, an initial target, additional targets, and a final trade to target. With the CTAs, this is where you start looking left yourself to find your entry, find your targets, to find your windows of opportunity. And you should be learning by this point how price behaves at a weekly trading zone. It's important because price is always trying to reach a weekly trading zone. Price is above the 30-minute BBC, it's trying to get to the zone overhead. Price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones since December 14th of 2009, almost 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, carved in stone for the entire week. Beyond that, just don't complicate things. Trading's not easy, but it can be simple if you let it. And as long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Let's have a look. There we go. Pretty obvious which way the wind's been blowing today. We had a little dip last night. Now, when we took out, this is the Thursday candle, the Wednesday, the Tuesday. I thought when we took out the Tuesday candle that we would revisit the Monday low. But that news this morning, well, as you can see, it sent us up to red and falling. Now, I posted a couple of charts in the discussion group and a little bit of commentary. If price can get through red and falling, then the next major resistance is yesterday's high and the 50% fib retracement. Over here, where we had the bullish cross, you'll notice that while we spiked it briefly back on Monday, that area has been good support all week. So, we've hit red and falling. See how we hit it yesterday and then what happened? Now, with the news we got today, I don't anticipate a big drop like we had yesterday. I mean, this was a green candle yesterday, all the way up to red and falling. Then look where we closed. We have no high impact economic news at all tomorrow. Now, the green line, the BBC, bull bear cross, bearish below it, bullish above it, bearish below it. You'll notice that the pullback to the BBC holds more often than it doesn't. But eventually it will trade through and start building legs in the other direction. And you'll notice this retracement held. So we get a leg and a retracement, the pullback held. Over here, when we were below the BBC, the pullback held until it didn't on May 3rd. And when we crossed that BBC from May 3rd, the market charted a course, not in a straight line. Leg, retrace, leg, retrace. See how those pullbacks hold? So we got to the new all-time historic high at 57.21 on July 16th. Now, it took from April to July to make the trip up, that's because it takes financial commitment for price to rise. But it's taken less than a month. Again, this is important. From April 19th to July 16th. And from July 16th to August 5th, almost all of it evaporated. They kept saying we're building a house of cards, we're building a house of cards, and well, that's what happens when the wind blows. Anyway, you should know that institutional traders, the ones who trade in tremendous size because of their tremendous account size, they're the ones who move price around. They look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Again, it has everything to do with account size. So whether you trade futures or stocks or crypto or Forex or ETFs, it would serve you well to spend 2 minutes with the daily chart of whatever you're going to trade before you start trading. Get an idea what the deep pockets are doing. That's you're literally looking over the shoulder of the deep pockets that move price. And you're able to identify where major areas of resistance are, as we just did. Yesterday's high, 53.59 and a quarter. And then the 50% fib, 53.70. Okay. Now, if we manage to make it through that 50% fib, first we'd have to take out yesterday's high. And then we get above the 50% fib, then our next major resistance is at the daily BBC, which is currently at 54.42. So the markets have really, given us a nice bounce. Question is, can we take out yesterday's high? And more importantly, as every day, how do we close today? We'll know in a few hours. All right, here's the ES. We drew in a window of opportunity on yesterday's broadcast, and that got filled. The price drops to a weekly trading zone. We expect support until proven otherwise. And when price rallies up to a weekly zone, we expect resistance until proven otherwise. Resistance will always send the market looking for support. The pullback to the BBC holds more often than it doesn't. So we got a leg and a retracement and a leg. If you look left, you'll find out my price had trouble there. We got below the BBC. Pullback holds more often than not, but eventually it trades through. We've had a lot of that this week because of the volatility. So we made it. In fact, when I drew this box yesterday, I said it may take 2 attempts to get all the way through because this was a huge window. It was at 52.77 down to, it was about a 20-point window. So the first drop got us down to a low of 52.65. And we caught a bounce. Remember, price rarely travels in a straight line. Leg, retracement, leg. So the vertical lines separate today, Thursday, from Wednesday, Tuesday. Back over here is Monday. This is where we opened last night, and we pretty quickly dropped to the short target. Support will send the market looking for resistance. Pullback holds more often than not. Resistance sends us looking for support. Back to resistance. Back to support. Red and falling turns to blue and climbing. That's a good indication that price may be about to trade through. Didn't hear it, try it. But actually, when blue and climbing gets directly above price like this, then that's really an indication that that the pullback will hold. So up we go with the perfect stack. Price, step line, blue and climbing, the BBC. Now on the 30-minute chart, we ripped right through. Now, this was 8:30. This is when that news came out. So we ripped through that zone. Now typically when we slice through a zone, price will retrace back to the zone it sliced through and continue in the direction of the slice. The market was so starved for good news that they just took it and ran with it today. What you'll see 70% of the time at a zone is consolidation. Like that, and that. 20% of the time rejection, 10% of the time the slice. Again, this is not a typical slice because it did not come back to the zone it sliced through. It just kept right on going to the long target and through the long target. Now this one candle here, just to give you an idea, this candle opened at 52, we'll call it 52.66 to be conservative, and it ran up to, well, it went from 65 to 85. It's 20 points. At $50 a point, that's $1,000 per contract traded in that one 30-minute period. All right, Michael has joined us, so we'll pick up where we left off when I come back. He's going to give us a recap of what happened in the live training room this morning, then do some live trading on the TradingView platform for 30 minutes, and then we'll finish the recap of the alerts and wrap things up with our good word for the day.
All right, here we go.
Looks good.
All right, good. All right, so good afternoon, everyone. Today is Thursday, the 8th day of August, 2024. Now, if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. And then when you click on that purple button, it's going to bring you to this page, which we're going to have refreshed tomorrow with all the stuff for next week. I'm going to click on this page, and all we ask for here is your first name, your last name, your email, and your phone number. There are 5 multiple choice questions. Please answer those honestly. And down here, if you have NinjaTrader, give us your machine ID. And if you have TradingView, give us your login ID. Okay. When you give us that, we can enable the indicators for you so you have them running on your desktop. Again, go to mytradingiq.com, purple button. No credit card required. Okay. All right, spreadsheet. We had another slow day today. And as we get into the larger time frames, we're going to have slow days all the time. So today, if you're going to do a spreadsheet, you got to read all the CFTC risk disclosures down the bottom. I don't know if I said that yet. But I did say that today was the 8th day of August, 2024. We made 10 ticks on the Russell, 50 ticks on the YM, and 24 ticks on the ES. That put us at $600 per contract. Look at down here. ES, we're at 2,050 on the ES, and the NQ is down there at 870. Normally the NQ is our big earner. Normally, the NQ is the one we're getting all the money. But I kind of kicked it to the curb so far this month because it was just too volatile. And with the number of contracts that we're trading, we don't want to have that much slippage. Anyway, so we're at $600 a contract this morning. It took 2 minutes and one trade to get the goal for the day. I got $100 a contract at that point. I think it was 8 ticks on the ES that I got that on. We did get a little bit of a late start this morning. We have that storm, Hurricane Debbie, that's running over us right now as we speak. It's actually, the worst of it is starting now, and it's supposed to last until like 9 o'clock tonight. So I don't know what the partners meeting is going to be like tonight. But anyway, that's what they're saying. I'm okay right now. So on the month now, we're at $4,380 over 6 business days, averaging $730 per contract per 2-hour business day. On the year, it's $62,332 over 147 business days, averaging $424 per contract per 2-hour business day. Yeah, so the thing that's not working because of that storm is the satellite stuff. So I normally run this off of T-Mobile, and today I had to connect it to the to the mesh network that is connected to the fiber optic network, because that one is working fine. So anyway, if you're doing the 24/20 blueprint, you started with one contract this year and added one contract per month. To do that, you have to earn $2,000 per contract per month. That is the 24/20 blueprint. The idea is to get you to 20 contracts within 24 months. So I'm going to do it in 20 months. I'm doing it in 20 months. I'm in my 20th month, not my 20th contract now. But if you started this year with one contract, you'd be on your 8th contract right now, and you'd be averaging $1,732 per hour so far this year. Okay, $1,732 per hour so far this year. Now, I didn't start doing it month by month here until a few months ago, where I started copying the whole thing. Here it was. In March, I started copying the whole thing down. So you could see month by month what the dollar value was per hour, given that period of time, and how it increased month by month. And it's significant that you understand that, this is not, it's not, a quick way to riches. It's a slow way, right? And here it was $9.24 an hour. And now we're almost double that now. But that was back in, 4 months ago. So it's taken 4 months to work from that up to 1,700 and something. $9.24 an hour up to, where are we right now? Right here, 1,732. By the end of the month, we should be probably double that, is what I think. And it should be. Logically, it should be, because the goal is the same. The daily goal is the same. The number of contracts is doubled. So our hourly rate should double, probably even a little better than that. I just want everybody to understand the whole incremental aspect of it. Now, when I started in January of last year, obviously my number is going to be much higher because I'm at 20 contracts now, not 8. And I started this year with 13 and not 1. So this number for this year is much higher. It would be even higher than that if I started it, if I continued it on from last year. I think, wouldn't it? No, I did continue it on from last year. Okay, so no, this is exactly where it's supposed to be. Anyway, let's get in there and go over the trades. Okay, we had a little bit on each one today. Not a lot, a little bit on each one. We're on the 19 range on the Russell and on the YM right now. And the reason we're on the 19 range is because with the Russell and the YM, it is easy to figure out where you have to put your orders. When a bar begins, if you know a bar is gonna trigger a trade on the close of the bar, it is easy to do the math and know where to put the orders. So like this bar right here, for instance, on the 20 and the 19 range, it's 20 points from the top of the bar. So the top of this bar, we'll just say the bottom of this bar right now, is the lows at 403. So it'd be 423 is where you're going to put that buy stop limit. 403, you see over there? 403 to 423, easy. Do the math. Right there, you would have just gotten filled at 423, you see. So on the YM, we had just a few trades. This was the first one, and that was a good one. We picked 40 ticks on that one. And this one right here, we picked up 10 more. We had break even on this one. And that was the last thing we did with YM. During the break, there was one blue arrow here that went about 20 ticks. One blue arrow here that went about 10, it looks like. 65 up to 78, 13 ticks. This one was 405 down to 388. So that went 17 ticks. Right. Plenty of time to take profit or lock in your stop or get your goal for the day, depending on how many contracts you get on. And that was it. That was it for the YM. Right. The Russell. Now we'll look at the Russell, and we didn't have much on the Russell either. Had some nice blue arrows in here. That one didn't put in a lower swing. It did give enough to get the stop to break even. That was in the pre-market right before the open. Now, I didn't actually even get started until it right in here somewhere. But the first trade was right in here. I ended up with a break even on that. The next trade was right in here, and we got 10 ticks in profit on that. And that was all that we did. Nothing else after that. So I guess I had one extra trade there. I have to update that on the spreadsheet when I get to it. Okay, and that was it in there. Now the ES, we had the majority of the trades on. And they were, yes, we're still on the 7 range. That's why we have the majority of the trades there. But normally, the yes is the one with the fewest amount of trades. It is now the one with the majority of the trades, right? So in here, this is where we got the goal for the day. On the first trade, we got 8 ticks in profit on that one. And then we had a break even here, and we had a +4 on that one. Got us to 12. And then when I was going through the lesson plan, we had one more in here. I took this purple arrow, and I picked up 12 more ticks to give me to 24. Now, the purple arrow wasn't really even a valid trade because we didn't get a lower swing right here on this, but I didn't really realize it when I took it. And I actually forgot I had it on. And I ended up getting out way over here instead of way down here. Either way, during the break, this is on a 7 range. So on a 7 range, you're still doing everything you normally would. You're still getting the same trades you normally get. In here, there was a short right here, purple arrow short right there. That means it was a bounce off the ribbon. So it was a ribbon trade. It wasn't even in no trade zone. So that's a good, nice, valid trade. It didn't go anywhere, but it's a good trade. Blue arrow here, that would have been just enough to get to break even. Blue arrow here would have given some profit. Green arrow, it was okay. Blue arrow here, that would have stopped out. And we have this black arrow right now. On this black arrow, I would wait for a pullback to like right here, 1550. Now, if I could get to my DOM, I would try to put that on. And I don't know where my DOM is, so I can't. Let me see if I can find my DOM. Here it is, and it's way over there. I was not expecting it to be way over there. I was testing the strategy on that. That's right, and that's why it's only down to 1 contract and all that stuff. Now, it's starting to pull back again. It looks like it's heading down to the weekly trading zone right here. That's what it looks like. I kind of look at stuff on the big picture here. It's 103. So as we go back and test the ribbon, I'm going to take it down close right now. It's got a high here of 16. We're going to sell 14 on that. Okay, this is what it looks like right there. It just filled me. And so I'm short from 1375. It gave me 1 tick of slip. My stop should be 10 ticks away. And there it is, 10 ticks away. And we'll see where it goes. It looks like it might stop me out, but I don't think it should. It should be headed down to the weekly trading zone. Okay. Now, bring it back here, and I want to go here one more time. For anybody that's watching on YouTube, to take the free trial, you go here to mytradingiq.com. Right, mytradingiq.com. Click on this purple button. When you do, it's going to bring you to a registration page. It looks a lot like this one right here. And all we ask for on this page is, I get to 4 ticks in profit. I got to let that stop. All we ask for here is your name, your email, your phone number. There are 5 multiple choice questions. You must fill in those multiple choice questions and stop to break even. Fill in those multiple choice questions, and then down here at the bottom, if you have Ninja Trader, give us your machine ID. If you have TradingView, give us your login ID. If you have both, give us both. Right? If you only have Ninja, you should consider taking a trial on TradingView. Right? Keep your brokerage at Ninja, but consider taking the trial at TradingView because these indicators are different than the Ninja indicators. Right? They include all the Ninja indicators, but they have extra stuff, more stuff that is only on TradingView. Okay. Now, let's slide this over here, and I don't see any questions in this box, and I don't have the YouTube box up, but let me open it up because we did get some questions in there yesterday, so let me just open that up. Just in case we get any questions today. Okay, this one right here is what we're looking at. All right, so I have the YouTube channel open now. Okay, so what we're looking for now, guys, pull back to the ribbon. We're just barely in a trend here. We didn't get a lower swing from this green arrow over here, so we're not going to look for anything right here. We didn't get a higher swing from this green arrow. We didn't get a lower swing from the blue arrow, so everything is pretty choppy. These blue arrows over here needed to put in a lower swing, and they didn't do that either. Now, the bigger picture is so fine. We almost have the lower swing right now over here. When I was reading the DOM today, part of the lesson plan today was to read the DOM, teaching people how to read the DOM, and it was working out really well this morning with what we were seeing in the DOM, going to the numbers that we were seeing and everything we were expecting happening. There's nothing in the DOM right now that's suggesting it's going to go, maybe right down there, 307. 307 is the spot on the DOM right now. We will see as it pulls back here. We'll see if we get another shot at something here. And there it is, pulling back. On the upside, it's 1450. 1450, where would that put us? That put us through the ribbon. We're going to no trades on there, so we're not going to have a trade anyway, but 307 on the downside, 1450 on the upside. Over here, we're not going to have a trade on the Russell. Well, we changed directions. We could have a trade here on the Russell. We could have a trade here on the Russell. And over here on the YM now, too. So we're getting this pullback. 1450 is still the number on the pullback. We're in a no trade zone here, but I think we're going to come out of it on the ES. 1350 is the high on this, so 1150 would be what you'd be selling. All right, we didn't come out of it, and now that 14 number that I said a minute ago is there. I think it might have been 1475, right? And there it is. I just hit that number, and we're still in a no trade zone, so it doesn't look like we need to trade here. It's got to come out of the no trade zone to true a trade. Right, you're not going to get any kind of an arrow while it's in no trade zone. And there's the no arrow. The Russell testing the ribbon, the YM testing the ribbon. So we'll be looking for trades on either one of those or both of those. It's got a higher 78.6, so 76.6 is what we'd be selling on the Russell. And this has got a high of 89, so 69 is what we'd be selling there on the YM. Okay. Okay, we ended up with nothing over here, and we're just about at nothing here. 78.9 to 76.9, and that number's going up, I believe. 78.8 down to 76.8 in there. Over here on the YM, we have a high here of 404. So we'd be looking at 84 as potential short over there. I don't think either one of those are going to have with a trade here. I think they're both going to go up and not give us anything. All right, so while we don't have trades there, let's go look at something else. Okay, while we're not trading there, let's go over here. Take a look at Bitcoin. And Bitcoin right now is, well, it's having a good day today. In the scheme of things that have happened recently, we're right exactly at the 50% retracement of that leg down. So if it were to find resistance right here, it wouldn't surprise me at all. If it were to find resistance right here. Okay, that's Bitcoin on the daily chart. Now I'm wanting to bump this back down. The NQ, we didn't trade the NQ at all today. I didn't even try the last couple of days. I just, with 20 contracts on and the spread being like it is, the markets being as illiquid, as thin as they are, it's just not worth trying. So we're going to go here to stuff that does trade well, given the current trading environment, and we'll do what we can with that. All right. On the ES, we're starting to pull back. The outer bands are a little bit spread there, so we're starting to pull back there. We should have something. And so this week, Monday, Tuesday, Wednesday, Thursday, we're on larger time frames all week this week, and we're still getting the goal, still doing what we should do. It's taking a little longer. Number of minutes is taking a little longer, but we're still doing what we always do, being consistently profitable. All right. The YouTube thing is what I was looking for in here, and I'm not. But there it is. Nope, I don't see any. That's good. Okay. I'm here to answer any questions if anybody has any. I did open it up now so I can see them. And So as we change directions here, I don't have the outer bands on this. It was left over from the lesson plan yesterday, I think. Put the rest of the ribbon on, and we'll put the outer bands on. I'll get rid of the BBC, the normal thing on there. Put the outer bands on there. So that Russell is looking kind of normal. The ES is turning into something that could be a trade here. We want it to pull back down. Now let's get the DOM out and look at the DOM again and apply what we went over this morning if we can to anything that's happening right now. We can't. If anything, yeah, it's just going back and forth. It's suggesting it's going to be a little bit of chop to the upside. Chopping to the upside is what it's saying right now. This one right here, 1925. 1925 on the pullback, and then 2250 when it starts going back up. Okay. We're in no trade zones on these two markets here as they change direction. Now, I haven't looked at them on a smaller time frame yet today, really. I did get some of the guys in the room that stayed on the smaller time frame today where it was trading pretty well. Is what I am being told. Anyway. All right, we're changing directions here. We're changing directions here. We have changed directions over here on the ES, so let's just wait on the ES. It needs to come down. We're oversold right here, so if we pop out of the oversold right now, it's going to give us a black arrow, and I don't like where that black arrow will be, so I'm not going to take a black arrow here. I'd rather have it come back down. Even if it does give us the black one like that right there, I'd rather have it pull back down and get us the ribbon at this point. Here. And one of the things I was looking at with people this morning in the room was bonds and how the bonds trade, how liquid they are comparatively. I think we're looking out here on it. We have the ZB right here. If I blow it up, I'm going to have to move this to the side. But if I blow this up, the bonds are incredibly liquid, meaning when you have a DOM open on the bonds, well, this is the ZB. The ZB is not the most liquid. The ZN is the most liquid out of all of them. But when you have a DOM open with the bonds, see, here's a ZN. I think I can open this DOM up right now. Yes, I can. Here's a ZN DOM. 33,000 total down here. 30,000, 33,000. It's incredible. Now, you're still going to find anomalies in here. You know, some of these that are higher than the other ones, but it takes forever for it to move because it's so liquid. It takes forever for it to move up or down a tick. This is on a 1 minute bar that we're looking at right here. Now, you can do it on a 1 minute bar if you want, because that way it's forced to give you a bar. But that big move this morning. I guess that was this afternoon. We had bond. Yeah, we had a bond auction this afternoon. So there was a big move right there from 2201 all the way down to 2118. That's about 40 ticks or something like that. Yeah, $30 a tick. That's a big move, bonds. And the move right back up, the recovery is a big move too. Now, if you were looking at this on a
the U.S. Treasury is the one who bought the bonds today. Which means I got to borrow the money from the Fed. Which means 35 trillion in debt for the U.S. wasn't enough.
No,
needed to run it up another 50 billion.
Yep, they're going at like $1 trillion every 6 months, aren't they? Right now.
Yeah.
Something like that.
Yep.
3 months, trillion a quarter. That might be what it is, a trillion a quarter.
Well, with this upcoming election, there aren't a lot of foreign countries that want to hold our paper, so
that's true.
we're forced to buy it ourselves.
Yes, print our own money. All right, so
that'd be great if we could. That'd be great if we could print our own money, but we can't. We have to ask the Fed to print it, and then they loan it to us at current prevailing interest rate. It's sad.
Sad thing. It is. Yeah, what we're looking at this morning, we're looking at this, and this is in the future, like slower moving, larger time frame stuff. I know this is a 2 range, and that's not a large time frame, but a 2 range on the ZB, each bar takes forever. Like, you're still looking at 5 minutes a bar. But when we put it all together, when the ribbon is spread, you come out of the overbought. It usually works out pretty well. And with the ZB, you only need 2 or 3 ticks to get the goal for the day. So it's a real thing. When we finish up with the 24/20 blueprint, and we have all those statistics and all those results, so that we can work with that, build on that in the years to come. I think we should take a look at a lot of other things, a lot of other opportunities that are there. Over the past, just the time that I've been doing the 24/20 blueprint, the markets have changed, the markets have evolved, new markets have been created, and they've matured and gotten to the point where they can be used. So there's a lot of things that we can and probably should do as we continue to move forward with all the things that we do, really. The ES didn't pull back deep enough to give us anything in here. The black arrows are the only ones that triggered because they came out of the oversold in an uptrend. Never hit the ribbon, so everything's getting pretty bullish right here. Now I need it to be bullish, really bullish, for a whole week. I don't know, I want to go look at the bigger picture again. We're a long way away from. See, I was saying this morning, if we're going to pull back in this area right here is where it's going to pull back to, if it were going to pull back, but it's not pulling back. And I was saying we had this triangle right here that we needed to break out of, and as long as it doesn't give us a head fake on the upside, then we'll probably do 100% retracement of yesterday's move. So I didn't know at the time whether it was going to be a head fake on the upside. I still don't. But the fact that it's leveling out right here suggests that it won't be a head fake on the upside. Now, last week, we don't look out here in the option channel. Where is it? Last week, I was saying something about hidden shoulder pattern. It didn't end up working out because and that was on the ES last week, the ES 30-minute chart. And hang on, I'm trying to get the data right here. It was 0600. There's that. It was right in here. I believe this is where it was. Here's the head. Here's one shoulder. Here's the other shoulder that was building. Now I started to mention it when it was like this, and I was looking for it to break up above this level right here. This was the neckline 5308. That's what I was looking for to break up above. It got a little bit above it, and now it really started to get up above it here, but it didn't make the run that I was looking for it to make. It kind of ruined the whole pattern by pulling back this deep right here yesterday. It kind of ruined the whole pattern by pulling that back that deep. But if we crunch this up, this is what I was saying last week. Okay, here. This is the picture that I put out there last week when it was only this much of it right here. It was this much of it. I actually started talking about it in the morning session when it was just this much of it. And I was saying this is setting up to be a nice head and shoulder pattern. And then at the end of the day, we had that much of it. And I'm saying, okay, if this goes up and breaks the neckline, which was right here, breaks that neckline, then it should go up to right here. And that's what I was looking for, the right here part. Now it broke the neckline right here, this neckline that I drew in, and it got stuck at this part right here, 5,300, between 5,300 and 5,325 is where it got jammed up, right in here. Okay, and then it got sent right back down. And I was looking for it to get up above this. If it got up above that, then it should be a nice retracement, complete retracement, and then continue movement up. So this is really what's holding us up right here. This whole space right in here is what's holding us up from that whole pattern that I had created the other day. And it can still work itself out of this mess. You know, there's other types of inverted head and shoulder patterns that it could put together right here. You know, it could do an inverted ascending head and shoulder pattern, which is just a whole bunch of words to say that it should go up. But if you draw it out, I'll show you what it looks like. That's what it looks like. Okay. And this up here, going over to there, the inverted ascending part goes like this. Okay, here's our neckline. Right there. Extend that out. There it is. So if you extend that out and you use what the market has done, you apply what the market has done to what the market should do. Let's move down here. All right. Now I know that this is just a lot of, right here is where it should go from. A lot of stuff, but what I drew in there right there in the yellow is just about right. Now, I don't know how long it's going to take for that to happen, if it's going to happen. I mean, it's going to go up eventually, but that is the other weekly trading zone, right? That's the other weekly trading zone. And yesterday, we were down near the lowest weekly trading zone of the week, yesterday. Right? Were we? It wasn't yesterday. It was the other day. But anyway, we were down at Monday. We're near the lowest. We were near it. We weren't at it. But usually by the end of the week, when you get something like that, it's going to be at the other weekly trading zone. And the other weekly trading zone is all the way up here where I just projected that to be. It could happen in a couple of days. Who knows? I mean, there's no reason for it to happen. We don't have any news that's coming out tomorrow. We don't have any news that's coming out today, anything left today. And we don't have anything coming out tomorrow, as far as I know. So, I mean, it could happen. I don't know if it's going to. So I say all this to say, trade what's in front of you. Right? Always trade what's in front of you, because that's what you know for sure. This right here, this is a long trade on the ES. There it is, a nice blue arrow right there. Blue arrow long trade, and that should make it up to this level right here. That's what it should do. 53.36. And the DOM suggests it's going to make it up to 33.35 anyway. Here it is. Okay, so the DOM suggests it's going to make it up to 33.35. So I'm going to lock in 4 ticks on that right now. And 37 is the next level up. 35 was the next level that I was seeing in the DOM, and the next one is 37 right there. Okay, so we'll see how it goes. It should get up above the prior swing high at 36.50, which is the high of the day, and there's another number right there. It should go all the way up to 38. I don't know if it's going to do it all at once, so I'm going to lock in some profit here. Because I don't know if it's going to do it all at once, but 38. Those of you guys that were in the lesson plan this morning, you know why I'm saying that, right? I'll put a marker up there, and that's where it should go up to. It's not that complicated. And there it goes. And it should go through 38. It should go beyond 38. It's going to come back and get me with 12, but still, that was a great trade. And that was an easy trade to take, an easy trade to see, an easy trade to manage. That was all from the lesson plan this morning. So that 38 number didn't get up there yet, but it's going to. This is the pullback before we go up again. So the next opportunity you get to go long here would be just a great opportunity. And what happened down here? The ribbon was spread and you came out of the oversold. Now we're not coming out of the oversold right here on the black line on the ultimate slingshot, so you're not going to have any kind of an arrow. We didn't bounce off the ribbon, so you're not going to have any kind of a valid trade set up. But if you just watch it in the DOM right now, see 38 is going to get hit, and then 39.50 I think is going to get hit right after. Okay. That's what it looks like to me. What was all that stuff that I just drew on that chart a minute ago? Let me go back and see that. All that stuff I drew on the chart. Okay, so we're getting up to that point right now. This point right in here. And I don't know what price is going to do. I don't. I know what the pattern suggests they're going to do. It's going to do. But right now, as we continue making new highs on the day, this is 100% retracement right here. It's 100% retracement. I'm pretty confident it's going to do that right now. I don't think this is a head fake to the upside. I think this is a real thing. Looking at the orders that are in the DOM showing right here, I think it's going to keep going. 53.60 is not that far away. It's not that far away. All right, I'm going to slide that back over here. It is now 1:29, so I have 1 minute left. 1 minute left in my time. Right now, 53.40, guys. It's going to 53.40. There it goes right through 53.40. It's going to keep going. 53.42. The pullback number is 53.39. 53.39 is the pullback number. Okay, when it does pull back. Now this is on the 30-minute. If I put this back down here to a 7 range, we'll go back over here and look at it on our 7 range. Got through that one now. 53.39 is the back number. That's right here. Right? That's not much of a pullback for this big leg up. I'm running out of time, but the pullback should be proportional to the leg up. Okay. And if you look at this last leg up right here, this is from yesterday's lesson plan. Those of you guys that were in there today. This is the leg up. This is the retracement. This is the next leg up. So the retracement should, this 53.39 falls pretty well right into the 50% retracement of the leg up if it does complete that leg up. Even if it doesn't complete the leg up, that 53.39 is still pretty much, it's a little above the 50% retracement of this leg that it just created. So the markets are acting well. They're acting well right now. It's kind of stuff you want to see. Consistently profitable, consistently doing what it should do. Now we just hit all the numbers that we're showing in the DOM. Just go ahead. Everything that we're showing. The next one up is 46. 46. All right. And now if we look at this, we're almost up there. That's right at the midpoint between the 2 weekly trading zones is where that leg ended right there. Is projecting it's going to end. All right. Anyway, I could stay here and do this with you all day. But if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. There's a partners meeting tonight at 8 p.m. That is when I believe the majority of the storm is going to be right on top of us or right leaving us or something like that. I don't know if it slows down or speeds up, but it's here now, and hopefully it's going to pass through by then. But hopefully I will be there at that time. Tonight, 8 p.m. Eastern time, partners meeting. If you haven't taken a free trial, go right here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Clicking on that, it's going to bring you to this registration page. First name, last name, email, phone number, 5 multiple choice questions, and if you have Ninja, give you machine ID. If you have TradingView, give you login ID. That's all you need. Once you do that, you'll be sent everything you need to get into the room in the morning, and we'll activate the indicators for you, so you get them indicating on your chart. Right? That's it. With that, we can pass it back up to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep. Recap of the morning session.
This morning, it took 2 minutes and 1 trade to get to $2,000.
Good job.
Thank you.
All right, guys, let's pick up where we left off. Okay. Yes. This is where we opened last night. This is the window we drew during yesterday's broadcast. It's a 20-point window. We said it would probably take 2 attempts to get through it, and in fact, that's what ended up happening. So we opened last night. We dropped to the short target, support, sends us to resistance, back to support, back to resistance, back to support. Then we get above the BBC, and then we had that 8:30 econ report onto the jobs, and it was better than expected. The market's been just absolutely starved for some good news. And so now here's an example of a slice. We sliced through that zone like it's not even there on a 30-minute chart. When the move ran out of steam, it retraced back to the zone it sliced through and has now continued in the direction of the slice. We talked about yesterday's high. Okay, that's major resistance overhead. You can see it here on the daily chart. We're very close. Yesterday's high, 53.59 and a quarter. Today's high, 46 and a quarter so far. The vertical lines separate today, Wednesday, Tuesday, Monday. Okay. As you can see, price goes from zone to zone to zone to zone. It's trying to get to the zone overhead, but to do so, it's got to take out yesterday's high. There was a failed attempt to get to the next zone up, 382 yesterday. Balloon climbing is directly above price. It can often become good resistance. Which could get step line crossing here. This enthusiasm of the news, I mean, it really wasn't that big of a deal. So at some point, we're going to get a retracement. Price always reverts to the mean. In our case, the mean is green. It's called the BBC. This stands for bull bear cross. Bullish above it, bearish below it. Really simple. Trading's not easy, but it can be simple. You gotta let it be simple. Okay. The Dow. Here's the window we drew yesterday. That one filled twice. This candle pulled back up, came down, did it again. This was a red candle all the way down. Market loves to repeat itself, so not unusual at all. This was the opening candle last night. 10 minutes into the life of this candle, the CTA targets went out. First we get the short target, just like the ES. Ran into BBC. We expect it to hold, so proven otherwise. And it held. And it sent us right back down to the short target, support, which sent us right back to resistance at the BBC, which sent us right back to support at the short target. Now, this short target is simply this low from Monday. So on your range chart, on your 5-minute chart, you can't see that, okay? Gotta learn to function in multiple time frames. And read the market from the top down. And then trade what's in front of you based on whatever time frame you've chosen to trade in. So as I said, when balloon climbing gets directly above price, it often can become resistance. The step line has already crossed on the way up. At price, step line, balloon climbing, BBC. That's what I call the perfect stack. And we got to the zone and we consolidated for quite a few hours. 1 hour, 2 hours, 3 hours. And we just got this move here. And now, before we can take out yesterday's high, we've got to overcome balloon climbing. Typically, when the step line crosses, a retracement back to the BBC. Then it becomes a question of, well, does the pullback hold or not? It holds more often than it doesn't. Eventually, it will trade through. It held and it held. But you'll notice here, red and falling turned to blue and climbing. And when that happens, that's a good indication that this time it might not hold. Okay? So we sliced through, came right back to the zone we sliced through, continued in the direction of the slice. Just like on the ES. So we hit the short target 1, 2, 3 times. Now, the 30-minute BBC is just about up to the long target. So a retracement back into this area for support could give us another opportunity to trade back up to the zone at 39,420. If the pullback doesn't hold, then of course the market will attempt to get to the zone below. These are the zones published Monday morning at 6:15 a.m. Eastern. Once they're published for the week, they're carved in stone. They don't change in any way whatsoever. So price is attempting to get to the zone overhead, but again, first it's got to get through blue and climbing. Then it's got to get through yesterday's high. Now, this high yesterday, 39,619. Tuesday's high was 39,600. So we only put on a higher high on the Dow by 16 points, which for the Dow isn't a lot. It takes 20 points to get your goal for the day. We're always pretty suspicious of a slightly higher high. See what happens here. Okay. Russell. At some point, the enthusiasm of that jobs report is going to wear off and bring people back down to earth. On the Russell yesterday, we drew in this little window of opportunity during the broadcast, and price came right down and filled it, and then it backed up and it filled it again. Okay. Like I said, that's not uncommon. So last night we did not hit the short target on the Russell because we got hung up at the zone. Red and falling was directly below price. And just as when blue and climbing is directly above price, it can become resistance. Red and falling is directly below price, that can become support. So the zone held as support, bounced us up to the BBC resistance, which set us back to the zone where we consolidated for hours, remember, 70% of the time. And then we ran right up to the zone overhead. And was it in 130-minute candle? No, it took 2. Took 2, we spiked it, but we closed back below it, and we got up to it, we did a little consolidating, and we've just hit the long target for the Russell. Okay. On the NQ, same story here. We opened last night and we dropped the red and falling, which was directly below price. And the reason that often becomes support is because it's on its way to becoming blue and climbing, which is bullish. And it walked price right up to the BBC and the zone. That's resistance times 2. Now we drew in 2 windows yesterday on the broadcast. The first one failed, and the second one failed. Support sent us to resistance, Sent us to support. Slow here. To resistance. Red and falling, acted as support on its way to becoming blue and climbing. So we got a nice move up. Okay. Now notice that this high, look at the horizontal line on my cursor, look left. High right there. That high right there. Resistance sends the market all the way back down looking for support. Should find support times 2 at the zone. Really, times 3. We got blue and climbing, the BBC, and the zone. Support. Off we go. We slice through the zone. We attempted to pull back to the zone. We didn't get quite to it because the market's very bullish. Here we have an example where price has traded through blue and climbing. Okay, blue and climbing got directly above price. Price very bullish. This was yesterday's high. 558 half. High so far. 518. Got a little more work to do to see if we can put in. Would that be the new high? Yeah, that would be the Thursday, Wednesday, Tuesday, Monday. This was the Sunday night gap lower open. And we know we closed that yesterday. We talked about it. Okay, so now what's all that's left for the NQ to do is to take out these highs. And then you've got plenty of room to get your goal for the day if you don't have it. 10 points. It's $200 per contract traded, $20 a point. So from, if you want to go 87 to 607, $400 per contract traded. I mean, just this little spot right here. Crude oil. Here's where we opened on crude. And ran sideways, just consolidating sideways. And then we dropped through the BBC. Leg and a retracement. Resistance. Sent the market to support. And from support, we go to resistance. That's a zone-to-zone move. From 74.60 to 76.60. We hit 76.60. No, missed it by 8 ticks. From that zone to 76.60. It's a $2,000 per contract move. I kid you not. And the price of crude moves $1. That's worth $1,000 per contract traded. When gold moves $1, that's worth $100 per contract traded. And silver, as I mentioned earlier, when it moves $1, that's $5,000 per contract traded. We hit the zone, resistance so far. Next zone overhead's up at 78.85. Gold, we opened and we dropped to the zone. Market found support. Red and falling turned to blue and climbing. We got through the BBC and we ran right up to the long target. Traded through it. Now this bearish cross right here, that's what this is all about. Target, these 2 hours of consolidation, finally punched through to the next area you would expect resistance. Where's the next area you'd expect resistance? Here, here, here. Traded right through those. So you always have to anticipate support or resistance simply by looking left. Okay. The market finds support Tuesday at the zone 2420/21. Yesterday, same thing. Today or last night, same thing. We bounced, the pullback held. So we bounced all the way to the zone. Hit the zone and then retraced all the way back to the BVC. Pullback held. Send us back up. Got a little twin tower formation there. Consolidated at the zone. So now the next major obstacle or target, want to trade long, is up at 2468. So 66 to 68, that would be $200 per contract traded. Then you got a potential obstacle here. You got a bearish cross right here. That is almost always good resistance. Okay. Bearish cross that leads to an extended move the first time price revisits that area will almost always be good resistance. Now the second or third time up, it can go right through it. Now, is it resistance 100% of the time? No. More often than not, yes. Support to resistance, back to support. This resistance yesterday came right at the bearish cross. See it? Send us back to support. And so just as this bearish cross had this effect, that's what you anticipate up here. If that doesn't happen, that's fine. But be aware, because like, let's say you've got your mindset on, I'm going to trade, you know, I know we're going to make it to the zone. Well, Thursday, Wednesday, Tuesday, Monday. Monday says you're not going to make it to the zone without a fight. You can't see that on a 5-minute chart, or a tick chart, or a range chart. You can execute on those, but you got to be aware of what's happening in the bigger picture. Okay. I mean, yesterday's high for gold, bearish cross. Yesterday's low for gold, weekly trading zone. Same again today. These things repeat themselves day after day. Okay, silver. Silver caught a bounce today. It certainly deserved one. We opened last night and this tail dangling down here. And then we ran up to the VVC. We spiked it, came back to it, almost made it to the target. Another retracement, consolidation. Price had to overcome red and falling here. And when it did, that should be your signal. Get along. This candle opened at 26.98. So that's 9 pennies, which is $450 per contract traded. Only takes 2 pennies in silver to get your goal for the day. The leg at a retracement right back to the BVC. The pullback held. So all these pullbacks held. And then we sliced through the zone like it wasn't even there. When it ran out of steam, what happened? Came right back to the zone we sliced through and continued in the direction of the slice. But take note, we didn't put in a higher high. Now this high, follow my cursor left. See? Got a triple top there. Blue and climbing is directly above price. The step line is already crossed. Normal market conditions, we would definitely see a pullback to the BVC. But we're up against a triple top and blue and climbing directly above price. Last market, the euro. Here's where we opened last night above the BVC. Leg and a retracement. And then a leg. And then a retracement. And another leg. Market found resistance right here. That's in it looking for support. Which it found here. If you go look left, you'll see why. And it bounced us right back up to the BVC. See how all these pullbacks held and held and held, and then it didn't hold. But when it pulled back up, it did hold. It's down on the short target. It's now pulled up to the BVC again. Price always reverts to the mean. Question is will it hold or not? Well, notice red and falling has curled up, blue and climbing. So the potential is certainly there. Price to trade through the BVC on this move. But you've got potential resistance right there. You can see there's a bearish cross here. Now these candles have already reacted off of that bearish cross. Okay, I mean they're right at the cross. So I'd look for resistance right in this area right here. 109,470. That's if we trade through. And we're printing a red candle. We got blue and climbing coming up. So we could trade down, meet up with blue and climbing. Then blue and climbing could take us above the BVC. One last look at the daily chart. Yesterday's high, 53, 59 and a quarter, 47 and a quarter so far today. Now, if we take out yesterday's high, this 50% fib retracement here, there's potentially good resistance. At a leg, retracement, leg, and we're working on a retracement. Price always reverts to the mean, so at some point, price is going to meet up. BVC. And I had said I was going to put reverse fibs on here. Maybe I'll do that in the workshop tonight. Maybe I'll do it tomorrow. Let's just see. I'd like to see price get to the BVC. See when the last time we spiked it, but it held. Why? Bearish cross. Spiked the bearish cross, but did it hold as good resistance? Yeah, it did. But the market's got its work cut out for it to get there. Got to overcome yesterday's high and the 50% fib. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or send us an email, support@cfrn.net. Ron, how many contracts for the 2000? That was 20 contracts. You should take the trial so you can be in the live training room in the mornings so you can really get a better understanding on how things work. I know you had a good question yesterday, and I see your question now. Goal for the day is 2 points on the ES, or 10 ticks in crude or 10 ticks in gold. So once you earn your way up to 10 contracts, you start it in your demo account. 24/20 Blueprint will walk you through the process. You got to put together 10 consecutive days in a row where you reach your goal, 10 trades or less. Now the goal is only 2 points if you're trading the ES. Again, if it's crude or gold, it's 10 tickets, whatever equals $100 per contract. Okay? So you put together 10 consecutive days in a row in your demo account. That helps you to have the confidence that you've actually learned the strategy. Okay? That's when the blueprint will give you the green light to go live with 1 contract. Now that you're trading for money, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a 2nd contract. Big difference between the first contract and the 2nd contract is the first contract is funded with your startup capital. The 2nd contract is funded with profit you earned in the market. Blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 10, all the way up to number 20. You only add 1 at a time when it's time, and you only add with profit you earned in the market. If you have the self-discipline to follow that, it will make it very difficult to blow up another account. Not impossible, but you will have to break some rules. So, 949-42 Emini, support at cfrn.net. As a passport holder, you'll have 2 hours of live training every trading day. That's something that 9 out of 10 new traders don't have. They don't have a teacher. They got a book, they got a grumpy guru, they got some indicators and oscillators they bought. And they bought them because, my goodness, they were only $97 and they only had 2 copies left. Oh, God, we all been through it. Good news is you don't have to go through that. You can actually have a live teacher every trading day. And outside of the 2 hours of group training every day, as a passport holder, you get private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle. As a passport holder, you also get the Logic 247 alerts, which help you learn how to read the chart properly, how to understand price action, get the concierge trade alerts, weekly trading zones, and you're able to attend the Thursday night members only workshop. Everything a trader needs, all under one roof, one low price. mytradingiq.com. To wrap it up with our good word for the day. Now, for the last 3 days, we've been talking about the importance of caring for the needy. Today, don't give up on your Saul. Huh? Acts 9:11. Go to the house of Judas on Straight Street and ask for Saul, for he is praying. Has everyone else written off your Saul? He's too far gone. He's too hard, too addicted, too old, too cold. Joseph believed one day he would be reunited with the brothers who betrayed him, and it happened. The prophet Hosea's wife deserted him and became a prostitute. Yet, he kept the door open, and she came home. God believed in Saul, and he believed in Saul through Ananias. Acts 9:17 says, "Brother Saul, the Lord Jesus, who appeared to you on the road as you came, has sent me that you may receive your sight and be filled with the Holy Spirit." Now, all you theologians know that Saul became Paul, who wrote most of the New Testament, quite often while in prison. Max Lucado writes, "My favorite Ananias-type story involves a couple of college roommates. The Ananias of the pair was a tolerant soul, tolerated his friend's late-night drunkenness, midnight throw-ups, and all-day sleep-ins. He didn't complain when his friend disappeared for the weekend or smoked cigarettes in the car. He could have requested a roommate who went to church more and cursed less or cared about something other than impressing the girls. But he hung with his personal Saul, seeming to think that something good could happen if the guy could just pull his life together. So he kept cleaning up the mess, inviting his roommate to church, and covering his back. I don't remember a bright light or a loud voice. I've never traveled on a desert road to Damascus, but I distinctly remember Jesus knocking me off my perch and flipping on the light. It took 4 semesters, but Steve's example and Jesus' message finally got through. So no matter what, don't give up on your soul." That's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.